Pictet Asset Management coming up on the programme. Arm will debut on the Nasdaq today after preparing for a wave of job cuts as Chief Executive Jane Fraser launches the biggest restructuring of the Wall Street giants in 2 decades. Bloomberg's Sue Keenan reports from New York. Interesting research, Ollie, talking about where they believe that the competitiveness of China EVs comes from. Worth a read. Bloomberg's Oliver Cook joining us there in Berlin with an update on the auto sector. Let's get to our stocks to watch. Lizzy Burden joins us with a preview of some of the stocks that could be on the move. And in fact, you start with one sector then, Lizzy.
Yes, Anna, of course, we've got the ECB decision, so I'm keeping an eye on the European banks. We've had that 180 in market pricing. Traders now seeing a 2/3 chance of a hike. Could you also see a hawkish QT surprise? Our economists at Bloomberg Economics say you can't rule it out. So I'm keeping an eye on Deutsche Bank, BNP Paribas, Santander, ING. So far this year, the Stock 600 Banks Index is up 12%, and that compares, if you look at the broader Stock 600, that's only up year to date 6.8%. So will we see a move at the open on this palpable change in tone? Next up, I've thrown in Rummy Cointreau and Pernod Ricard. A bit early in the morning for them, you might say, but of course Barclays has double downgraded both of them to underweight because it's done some modelling and it's looking at the 25 to 45 age category. It sees a 22% drop in population by 2035. So pair that with the slowing economic backdrop and you've got a key category for spirits drinking, smaller in number with less money to spend on alcohol. Finally, I've thrown in the chip stocks because, of course, we've had Arm pricing its IPO at the top end of the range to raise $4.87 billion. It's the world's biggest listing of the year. Will we see a read across to the likes of Infineon, ASML, AMS, ST Micro here in Europe, or is it going to be seen more as an IPO story than a broader chip story? They're what I'm watching.
Lizzy, thank you very much. Lots to talk about then this morning when we run up to the open. Lizzy Burden with an update on some of the stocks to watch. Mark, just minutes then until the start of the European trading day. European futures look a little lacklustre. US futures actually pointing a bit higher, up 0.4% on Nasdaq. E-minis up 0.25%. I suppose we've got through one of the big risk events of the week. Is that the way we should look at the market's shrug around CPI?
Yeah, I think that's right. And we're still also trading this idea that softer yields...
This to go until the start of cash equities trading. Welcome back to Markets Today. I'm Anna Edwards in London with Tom McKenzie.
And here are your top stories. US core CPI picks up month on month, keeping another Fed hike in play this year. Markets, though, 2023. But it is the ECB that steals the limelight for us, at least for now, Anna.
Yeah, absolutely. I'm not sure if long suffering is how you describe some of these European equity markets. Up year to date. The FTSE may be a little long suffering. Maybe it's the IPO story is long suffering, though. Let's talk about where we are across a number of assets. Asian equity markets then on the front foot, up by just shy of 1% actually on MSCI Asia Pacific. It seems that hot print around core inflation in the United States, well, the market just shrugged at it, said we're not going to get bogged down in worrying about more hikes from the Federal Reserve. That seems to be the market's psychology. We look ahead to retail sales later today. The euro at 107.42, up 0.1%. We're heading towards, of course, as Tom, you point out, that important ECB decision. It's on a knife edge, a cliffhanger, choose your metaphor. The Bloomberg dollar index down a touch, down 0.1%. That's giving some upside to equities through the Asia session as well. And the Brent crude price, we put that in because we spent a lot of time this morning talking about whether higher commodity prices are inflationary. To get to that part of the conversation, you first need to get through whether we're going to see higher commodity prices. Well, this morning we are, Tom, and sometimes that is positive for energy names. What do you see in the futures?
Bit of a holding.
Futures are pointing higher at this point of the trading day. We will see how that fares as we get closer to the US Open. But at this stage, we are expecting something a little brighter when we get to the US trading day. But this is the FTSE 100 up by just 0.1%. We are through that big risk event that was the CPI print. A lot in the market, a lot of people, of investors would have been very intensely focused on that CPI print. And the fact that the market shrugged, maybe that gives us another platform to bounce off here in terms of markets. But the FTSE actually going a little higher this morning, up by 0.2%, even if the rest of the markets are a little flatter. Perhaps that will have something to do with energy prices. This is what we see on the FX markets. I pointed out the slightly weaker dollar, a little bit of strength in the euro. We're heading into the ECB meeting with that setup. Worth bearing in mind that the dollar just on the back foot a little bit after its recent run of strength, and the euro still around that 107 handle as we approach that crucial cliffhanger at the ECB. We're seeing buying of sovereign bonds, so we're buying stocks, it seems, at least in the run-up up to the US Open, and we're buying sovereign bonds. Some of those yields coming down a little bit. And interesting to see that on the commodities side, we do have Brent crude and WTI bouncing to the top of that board on the GMM. So it does suggest that we are seeing some slightly outsized moves on commodities this morning. Whether that is inflationary, of course, in the longer term is a bit of a different question. Tom, what do you see on sectors?
So very modest gains across the benchmark.
Richard Clarida joins the team, PIMCO's global economic advisor and former Federal Reserve